Hi folks, it's Shaun, Chelf, founding partner and wealth advisor here at Reliant Wealth Planning. We wanted to come on and give you an update of some things that have been going on in the market and some actions that we have taken lately. So right now there's a great debate raging on, and actually I hope most of you are unaware of that because I hope a lot of you aren't reading what economists, market analysts, and asset managers have to say. There's a lot better things you can do with your time. We get paid to read that and go through that pain. I hope you're not doing it. But right now what the debate is have we seen the market bottom? So what's been going on in the market with the rapid fall and then the increase, is that it? Is it over? And no matter what your personal opinion is, I can tell you there's someone very experienced, very learned out there who's going to agree with you. Opinions are all over the board. And this is really hard right now, harder than almost any other time during a recession to try to figure out what's going on. So the question is, well, why is it so hard this time around? Well, I'll tell you, historically, this is kind of the pattern that we see. First, there's some kind of financial crisis. Depends on the time period you look at what that crisis is. In 2000 to 2002, it was the popping of the tech bubble and then a terrorist attack. In 2008, it was bad loans made by banks that kind of filtered through the rest of the economy. Every time it's something different, but there's some type of financial crisis. That financial crisis then leads to a recession where the economy slows down because of what's been going on. And then the government takes some kind of response to it to help try to get it back on track. That's the normal pattern that we see in such times. Right now, though, that isn't what's happening at all. The pattern's kind of been flipped on its head this year. Actually, it's the government response that came first. Now, what they were responding to, obviously, is the pandemic that's going on. The government started responding to try to save lives, and what they did is they started purposely shutting down parts of the economy. So the government response actually came first. Well, the response then caused a financial crisis. Now, that was done on purpose. They knew it was going to happen. They calculated to save the lives, that's what was necessary. But we had the response that caused the crisis, then led to a recession. Well, we've never had a purposely created recession before. So trying to figure out what it looks like when we do that and how it'll look coming out is anybody's guess, which is why it's so hard to figure this out. So here's what the market looks like year to date. There's a chart from January 1 all the way up to yesterday, April 14th. So as you can see, we were going along fine in the beginning of the year. The market was actually going up and it reached an intraday high. So the highest it got during the day was on February the 19th, and it got to 33.93 on the S&P 500. Just a quick reminder, the S&P 500 is just an index. It's measuring basically 500 of the largest stocks that trade in the U.S., and it's looking at what their overall value is. So that reached about 33.93. Then news of the virus started getting worse and worse, and the pandemic started. And then, as you can see, we had a huge downshift in the stock market. Now, every once in a while, it would recover back really quick and in these jagged motions and then fall again. That's what in our first video we referred to as the tiger teeth. It would go up, it'd go down, it'd go up, it'd go down. Finally, it hit what right now is its bottom on March the 23rd. So during the day on March the 23rd, the market got all the way down to 21.91. So it came from the mid 3,000s to the low 2,000s. Well, if you do the math from the very top to the very bottom, that's about a 35.5% drop, overall change. Now, what's interesting is the first video that we made, if you all watched that, we made on March the 24th. And in that, Laura and I were talking to you and we said, look, we don't know when the market's going to turn around and recover, but based off the way it fell, we think when it goes up, it's going to go up quickly and violently. Little did we know, the day we were making that video was the start of that happening. So within about a 3-day period of time, from March the 24th, the market went up 20%. That's pretty quick and that's pretty violent, like we had said. Now, we didn't know it was on the day that we were talking about, but it was obvious when it did happen, it was going to be quick. Then the market went through a couple days of kind of the up, down, and then it hit another section where it went up rapidly, and it went up another 12%. So it went up 20%, kind of slowed down, gave a slight bit of that back, and then it went up another 12%. So that's kind of what the market has looked like thus far. This is what has a lot of the experts saying, well, was that it? Are we done? Or are we going to go back down and reach a new low? Now here's an important signal that we've been watching for that actually occurred yesterday. And that signal is for the S&P 500 to reach 2811. Now what's so special about that number? Because that is the exact middle from top to bottom, or to say it in another way, that means we've retraced 50% of the loss back up from the bottom. We crossed that point yesterday at 2811. And why is retracing 50% of the loss important? Because through our analysis and reading, what we found is in any type of bear market, if the bear market retraces back at least half of its loss, the chance that it'll go back down and make a new low is very, very slight. So what I'm saying is that the chance that we've seen the bottom is actually pretty good. Now, because of that, we've been watching for that 2811 point. We took some actions in TAPA, that tactical allocation of passive assets that many of you have as a partial strategy. Before, all the way up till last week, TAPA's been positioned about only 30% growth and 70% defensive. And that's worked very well for us. But as the market recovered and finally crossed that threshold, that's a good indicator maybe we have seen the bottom, we started shifting some assets. Now TAPA is sitting roughly at about 56% growth and 44% defensive, around there somewhere. So it's roughly half and half, which is getting a little more aggressive. We still have a lot of dry powder and defensive left because we're not sure that's the bottom. So we want to be ready to react and do protection if it does fall down a little more. But we need to start shifting back so that we can take advantage of some of the recovery. Now, my wife sometimes tells me that what I think I say is not exactly what I said. So I want to be very clear about what I didn't just say. And that is, I did not say that we cannot go any lower than March 23rd, just that the probabilities are good that we won't. Again, we've never had a recession like this. We've never had a purposely caused recession. So what does it look coming out? Nobody knows because nobody's seen it. But chances are good based off of past bear markets that we probably have seen the low. Something else I definitely did not say is I did not say the market would go straight up from here. As a matter of fact, today the market's giving back some of the gains that it created yesterday. This has been a record-setting volatile market. Those ups and downs have set records both on the downside and on the upside based off of speed. There's no reason to think that isn't going to continue. So it's not that we're going to have a straight up path from here, but we believe, yes, the market can go down further. We might even get near that old low, but the chances are, not 100%, but the chances are good that that old low will be the low of the market. So we need to start positioning that a year from now, we can take advantage of the recovery that's coming. So as always, if you have any questions for us, feel free to reach out to us. Here are Laura and I's email addresses and a telephone number you can get in touch with us. I also wanted to share with you, lots of you had asked about how are the personnel at Reliant doing? How's everybody? I'm happy to tell you everybody is happy and healthy. Most of us are working from home. We have only 2 people, a skeleton crew, actually working in the building, but all of us are still working every day to try to do the best we can for you. So again, if you have any questions, please let us know.